Hey guys, it's Wayne Scully, business and tax strategist. I'm focused on providing solutions to landlords, flippers, real estate pros in the New York tri-state area. My firm offers tax compliance, business consulting, and high-value tax plan strategies to save you thousands of dollars. I'm continuing my talk about real estate and real estate income and expenses. We started a couple of videos ago where I talked about the income side of things. I'm talking about the expense side of things. And most people who have rental property or any type of property, even if it's owned and not being used for residential rent, but more for commercial, you can deduct certain expenses, right? So before I get into some of the more common expenses, I just want to touch on a couple of topics, a couple of related topics. For example, personal use of the rental property. So if you use the property for personal use, you generally cannot deduct the expenses that you incurred, right? So if it's a personal, you cannot deduct it. It's only if you use it for investment purposes, business purposes, or it's rented to, obviously if it's rented, that will constitute a business purpose to someone else, then you can deduct those expenses. There are exceptions. There is a certain rule that allows you to collect rent for a number of days without reporting the income, but you also can't deduct the expenses. Okay, so we'll talk about that another time. And then if you're a part owner of a property, you get to deduct a portion of the expenses that are incurred. Likewise, you only report a portion of the income. Okay, so if you and your sibling or someone else owns a investment property, like a rental property or something, you can divide the expenses based on the ownership percentage in that property, right? So just again, as I said before, I'm going to touch on a couple of expenses, just to name a few: advertising, auto and travel, cleaning and maintenance, commissions, depreciation, mortgage interest, insurance, legal and professional fees, management fees, rental payments, repairs, and so forth. Those are your more common expenses related to rental real estate. I'm just going to go into a little detail about a couple of these. For example, depreciation, it's a capital expense, meaning that you can't deduct it right away. You can't deduct it the moment you incur it. So you take a mortgage to buy a house, $200,000. You can't just deduct $20,000 your tax return. There's a way to recover that. There's a way to get that money back as a deduction on your tax return, and it's called depreciation. So there's a certain number of years that you are able to recover it, depending on the nature of the building. If it's residential real estate, it's generally 27.5 years. If it's commercial, it's 39.5 years, or 39 years rather. And if it's a mixed use, it's most likely going to be 39 years as well. So again, depreciation is deduction for rental property. It begins with the day the property is ready and available for rent. So if it's ready and available for rent, and even if it's not rented, you can still get the deduction for depreciation, right? So you fix up your property, you're waiting for a tenant to occupy the property. It's been a couple of months, you can't find the right tenant. Those 3, 4, 5 months that it's unoccupied, you still count the time because it was ready and available for use. Okay, that's very important. Insurance premiums, they're deductible, but if you pay insurance premium in advance, you have to be careful, because if you pay insurance premium for more than, say, 12 months, let's say you're going to get a really good rate on the premium and you decide to pay for 2 years. Well, you can't, if you're a cash basis taxpayer, which means you report money as it comes in and you expense as it goes out. You cannot report that as an expense or deduct that expense for the entire 24-month period. It's only for the period, the current tax year, the year that you initially paid. So if you paid in 2021, say February or January or something, but you paid for 24 months, you can only deduct half of what you paid. Okay, that's very important. You don't want to start deducting stuff you can't, then you get in trouble with the IRS. Interest expense, again, is another big one. We all pay interest on mortgages or whatever and so forth. So what can we deduct? We can deduct interest you paid, typically if it's residential real estate and Not on your personal, not on the personal side of your return, but on the Schedule E, which is where you report the income and expense from your activity, your rental activity, you were able to deduct without any limitation, which exists on the personal side. For some states, some people in some states, you can deduct the entire interest paid. Interest paid, not payable, paid. The interest that you actually paid, you wrote a check you sent to the bank, that's interest paid, right? So you can deduct that. So if you have proceeds from a loan that you use for something other than pertaining to the rental real estate, you're not going to be able to deduct that interest. It used to be, but no, it's not anymore. It used to be where you can do that, but not anymore. So again, folks, you'll not be able to deduct the interest that you paid on proceeds you received that do not impact the rental activity. So you take money out on a loan, form of a loan, you use it to buy, a fur coat for $5,000. Interest on that, not deductible. Okay. All right, sir. When you pay certain expenses, when you close your mortgage, such as recording fees and abstract fees and commissions, you're not able to deduct those as interest. Those get capitalized. When I say capitalized, they become part of what you paid initially. You add it to the amount you paid. Remember I talked about earlier about what the basis would be for depreciation, that underlying mortgage or whatever, or the underlying cash that you paid to get the property, assuming you have no mortgage, whatever you paid initially, you can't get it right away as a deduction, get it over time. You're going to add those other costs to that number as well. It becomes part of what's called your basis. Then you deduct it over time, okay, over the life of the property. Now, there's some limitations on, business interest limitation on how much you can actually deduct, how much interest you can deduct, and the gross revenue cap on that, meaning that if you make gross revenue of $26 million or more than $26 million, which most people who are basic landlords and so forth will not get to that point. It's like you have to be a mega real estate tax pro to get to that point. Anyway, if your gross revenues are $26 million, more than $26 million, any interest associated with that is capped, limited. But again, it does not pertain to you. Rental or real estate activities are not subject to this limitation, unless you're in the business of trade. The trade that you're in is real estate. Then you have to deal with this limitation, all right? So folks, I hope I didn't confuse you. Interest generally for rental real estate is deductible, but depending on where you are on the spectrum, landlord, flipper, or real estate pro. Real estate pro, if you're in the business of, if that's your business, that's your sole business, or as a real estate professional, that's your trade. And depending on how big you are, you may not be able to deduct that interest once your revenues exceed $26 million. I hope I've given you a lot of food for thought. I hope I've given you some good information, and I'm going to end there for today. Pick it up another time to talk more about real estate expenses. If you have any questions in the meantime, or have issues with some of the tax concern, give me a call. My name is Wayne Scully, and I'm with W. Scully CPA PC, always working around the clock to save you a chock full of money, time, and stress. Make an appointment by visiting my website, www.wscullycpa.com. That's www.wscullycpa.com. Or call me toll free 855-254-1892. Please comment, like, share this video. If you didn't like it, let me know. Let me know why, so I could do better. Okay. Thanks, guys. Talk to you soon.